Preparing for a Deloitte FP&A interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What is the role of FP&A within Deloitte? FP&A helps Deloitte leadership turn financial data into decisions. I would support budgeting, rolling forecasts, utilization analysis, revenue and margin monitoring, and clear management reporting across service lines or client portfolios. The role is not limited to explaining historical results. It also identifies risks, models scenarios, and recommends actions. In a professional services environment, I would connect people capacity, client demand, billing, collections, and profitability so leaders can allocate resources confidently. While answering, focus on planning, forecasting, management reporting, performance analysis, decision support, stakeholder communication, and how FP&A connects financial information with Deloitte's consulting, audit, tax, and advisory businesses. Question 2. How would you build an annual budget for a Deloitte service line? I would start with actual performance, current pipeline, staffing plans, and leadership priorities. Then I would model revenue using headcount, utilization, billing rates, project timing, and expected client demand. Expenses would include compensation, hiring, travel, technology, and allocated overhead. I would develop base, upside, and downside cases, challenge assumptions with service line leaders, reconcile the model to corporate targets, and establish monthly variance reviews. That process makes the budget both credible and actionable. Make sure to cover historical baselines, revenue drivers, headcount and utilization assumptions, compensation, operating expenses, leadership input, scenario analysis, validation, approval, and monthly variance monitoring after the budget is finalized. Question 3. What is the difference between a budget, forecast, and outlook? A budget is the approved financial plan, usually established before the year begins, and it provides a baseline for accountability. A forecast is an updated estimate of expected results using actual performance and revised assumptions. An outlook is often a focused management view of where performance is heading, sometimes emphasizing the next quarter or key risks. I would use the budget to measure performance, the forecast to reallocate resources, and the outlook to prompt timely decisions. In your answer, distinguish the fixed annual plan from an updated estimate and shorter-term management view, explaining timing, purpose, assumptions, ownership, and how each supports performance management and resource decisions. Question 4. How would you forecast revenue for a professional services business? I would forecast revenue from the bottom up, starting with contracted backlog and active engagements. For each project, I would consider remaining work, billing rates, expected completion dates, staffing capacity, and delivery milestones. I would probability weight qualified pipeline based on historical conversion and expected start dates. I would then compare the result with leadership targets, investigate differences, and update the forecast monthly. This approach captures both committed revenue and realistic growth opportunities. Be sure to mention backlog, pipeline probability, billing rates, project schedules, staffing capacity, utilization, cancellations, contract terms, seasonality, and reconciliation between bottom-up engagement forecasts and top-down leadership targets. Question 5. Which KPIs would you monitor for Deloitte's client service business? I would monitor revenue growth, utilization, realization, average billing rate, backlog, pipeline coverage, project margin, and revenue per professional. For client finance, I would also track unbilled revenue, aging, days sales outstanding, collection trends, and write-offs. People metrics matter because headcount, attrition, hiring, and subcontractor usage drive delivery capacity and cost. I would distinguish leading indicators, such as pipeline and staffing, from lagging indicators, such as reported margin and collections. Focus on revenue growth, utilization, realization, billing rates, backlog, pipeline conversion, gross margin, project profitability, receivables, collection days, headcount, and how leading indicators support corrective action. Question 6. How do you perform a monthly budget versus actual variance analysis? I begin by validating that actuals, budget, and reporting dimensions are complete and comparable. Then I quantify major variances by revenue, headcount, compensation, utilization, and operating expense, separating timing effects from structural changes. I speak with business owners to confirm root causes rather than simply describing movements. Finally, I determine whether the variance changes the forecast, document actions, and present a concise explanation with financial impact, accountability, and recommended next steps. In your answer, explain data validation, materiality thresholds, price-volume mix analysis, timing versus permanent changes, root causes, owner discussions, forecast updates, and concise recommendations for leadership. Question 7. Tell me about a time you improved a forecasting process. In one role, forecasts were built manually across multiple spreadsheets, creating inconsistent assumptions and late submissions. I mapped the process, standardized definitions, created a driver-based template, and added validation checks for headcount, revenue, and expense inputs. I also introduced a submission calendar and review meeting with business owners. Forecast preparation became faster, errors declined, and leaders received explanations earlier. The key lesson was that process discipline and stakeholder ownership matter as much as the model itself. Make sure to structure the response with situation, problem, analysis, action, measurable improvement, stakeholder adoption, and controls that made the new forecasting process sustainable and repeatable. Question 8. How would you explain an unfavorable margin variance to a Deloitte partner? I would lead with the conclusion: margin is below plan by a specific amount, primarily because utilization fell and subcontractor costs increased. I would quantify each driver, explain whether the impact is timing related or recurring, and compare it with the latest forecast. Then I would discuss actions, such as adjusting staffing, accelerating billable work, reviewing scope, or controlling discretionary spend. I would keep the discussion commercial and solutions-oriented, not overly technical or defensive. Focus on translating accounting results into business drivers, quantifying the impact, avoiding jargon, distinguishing temporary from recurring issues, acknowledging uncertainty, and proposing practical actions rather than assigning blame. Question 9. What is driver-based forecasting, and why is it useful in FP&A? Driver-based forecasting links financial results to the operational factors that create them. For example, professional services revenue can be modeled from billable headcount, utilization, billing rates, and project timing, while compensation depends on headcount, salary levels, bonuses, and hiring dates. This approach is more transparent than applying a simple growth percentage, allows leaders to test scenarios, and highlights which assumptions require intervention. It also improves accountability because business owners can influence the drivers. In your answer, define operational drivers, connect them to financial outcomes, explain transparency and scenario benefits, and give professional services examples such as headcount, utilization, rates, project starts, and compensation. Question 10. How would you forecast headcount and compensation expense? I would begin with opening headcount by level, location, and service line. I would add approved hires using realistic start dates, subtract expected attrition, and model promotions, salary increases, bonuses, benefits, and payroll taxes. I would separately forecast contractors and recruitment costs because they can change quickly. I would compare the workforce plan with expected demand and utilization, then run sensitivity cases for delayed hiring, higher attrition, or weaker revenue before finalizing compensation expense. Be sure to mention opening headcount, attrition, hiring timing, promotions, salary increases, bonuses, benefits, contractor usage, vacancies, start date risk, and reconciliation to approved workforce plans. Question 11. How do utilization and realization affect profitability? Utilization measures how much available professional capacity is spent on billable work, while realization measures how much of standard or recorded value is ultimately billed and collected. Low utilization can reduce revenue because people are unstaffed, Low realization can reduce revenue through discounts, write-offs, or scope issues. I would analyze both together by project and team, because high utilization does not guarantee strong economics if rates are discounted or work is written off. Cover the distinction between available capacity and billed work, realization versus standard rates, revenue and margin effects, write-offs, staffing decisions, and why both metrics should be analyzed together. Question 12. How would you manage a forecast when client demand suddenly weakens? I would first quantify the change using backlog, pipeline conversion, project delays, cancellations, and utilization data. Then I would refresh base, downside, and recovery scenarios, separating immediate actions from longer-term decisions. I might slow non-essential hiring, redeploy people to stronger demand areas, manage contractor spend, and review discretionary costs while protecting critical capabilities. I would communicate the assumptions clearly, update the forecast frequently, and avoid cutting resources in ways that damage client delivery or future growth. Focus on identifying leading indicators, refreshing scenarios, assessing backlog and pipeline quality, adjusting staffing and discretionary spending, communicating assumptions, and protecting delivery quality and long-term client relationships. Question 13. What would you include in a client profitability analysis? I would include contracted and recognized revenue, direct labor hours and cost, subcontractors, travel, discounts, write-offs, unbilled amounts, and relevant overhead allocations. I would compare actual profitability with budget and prior periods, then investigate scope changes, staffing mix, realization, and collection performance. I would be transparent about allocation methodology because arbitrary overhead can distort conclusions. The analysis should identify actions, such as repricing, tighter scope control, improved staffing, or escalation of collection issues. Mention revenue, direct labor, subcontractors, travel, discounts, write-offs, allocated overhead, collection performance, scope changes, project risk, profitability trends, and careful treatment of allocation assumptions. Question 14. How do you ensure accuracy in an FP&A reporting package? I use a controlled process rather than relying on a final visual check. I reconcile source data to the general ledger or approved operational systems, verify period cutoffs, and apply consistent definitions for revenue, headcount, utilization, and margin. I include checks for missing entities, duplicate records, unexpected movements, and balance differences. Before distribution, I review material variances with owners, lock the final version, document assumptions, and obtain an independent review for high-impact reporting. In your answer, discuss source system reconciliation, standardized definitions, automated checks, period cutoffs, review controls, version management, variance investigation, documentation, and independent review before distribution. Question 15. How would you handle conflicting data from finance and a client service leader? I would avoid treating the disagreement as a personal conflict. First, I would clarify the metric, period, scope, and source each person used. Then I would trace both figures to authoritative systems, check timing, mapping, accruals, and manual adjustments, and reconcile the difference transparently. If judgment remains, I would present the alternatives and their impact to the appropriate decision maker. I would document the agreed definition so the same issue does not recur. Be sure to mention listening first, clarifying definitions and timing, tracing data to authoritative sources, reconciling differences, documenting assumptions, escalating objectively, and preserving trust with the stakeholder. Question 16. What Excel or analytical tools would you use in an FP&A role? I would use Excel for flexible modeling, including SumIfs, XLOOKUP, pivot tables, sensitivity analysis, and structured scenario outputs. For recurring data preparation, I would use Power Query or a comparable automation tool, and I would use SQL or BI dashboards when larger datasets require stronger scalability. I build clear input, calculation, and output sections, include validation checks, and protect key formulas. The tool matters, but a controlled, explainable process matters more. Focus on practical proficiency with pivots, XLOOKUP or index match, SUMIFs, Power Query, scenario models, data validation, charts, SQL or BI tools, and controls that prevent spreadsheet errors. Question 17. How would you present a forecast to senior Deloitte leadership? I would begin with the headline, expected revenue, margin, and cash performance versus budget and the prior forecast. Next, I would show the few drivers that explain the movement, such as utilization, project starts, hiring, pricing, or collections. I would highlight risks, opportunities, confidence levels, and specific decisions needed from leadership. Supporting detail would be available, but the main presentation would remain concise, visual, and tied to actions rather than a list of numbers. In your answer, emphasize an executive summary, key movements, risks and opportunities, confidence level, decision requests, concise visuals, business implications, and readiness to answer detailed follow-up questions. Question 18. How do you prioritize competing requests from multiple stakeholders? I prioritize requests by decision impact, deadline, client or regulatory sensitivity, and whether another activity depends on the deliverable. I clarify the required output and level of precision, estimate effort, and communicate a realistic timeline rather than accepting everything immediately. I handle urgent, high-impact requests first while protecting recurring close and forecast deadlines. If priorities genuinely conflict, I escalate with clear trade-offs. That approach keeps stakeholders informed and prevents rushed, unreliable analysis. Make sure to cover business impact, deadlines, decision dependency, regulatory or client commitments, effort, data availability, expectation setting, escalation, and maintaining quality while managing multiple Deloitte stakeholders. Question 19. How would you investigate a decline in accounts receivable collections? I would segment receivables by aging, client, project, invoice status, and dispute reason. Then I would determine whether the issue is delayed billing, inaccurate invoices, client approval, scope disagreement, payment terms, or broader client liquidity. I would review unbilled revenue and recent billing activity with engagement leaders, assign collection actions, and update the cash forecast. I would also monitor concentration and overdue trends so leadership sees both immediate recovery opportunities and emerging credit risk. Discuss aging trends, invoice accuracy, billing delays, disputes, client concentration, payment terms, collection ownership, unbilled revenue, cash forecasts, and coordinated actions with engagement and finance teams. Question 20. Why do you want to join Deloitte FP&A, and what would you contribute? I am interested in Deloitte FP&A because it combines rigorous financial analysis with a complex, client-driven operating model. I would bring strong modeling, variance analysis, attention to detail, and the ability to explain financial drivers clearly to non-finance stakeholders. I also enjoy improving recurring processes, not just producing reports. In this environment, I could help leaders understand demand, capacity, profitability, and cash while building trusted relationships across service lines and corporate teams. Be sure to connect Deloitte's scale and client-focused environment with your analytical strengths, communication, ownership, continuous improvement mindset, professional services understanding, and ability to translate data into decisions. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.